H4 to MN, because MN is the monthly time frame, and this is from 1 minute. Thank you so much for that. To each one. These are recognized time frame. However, there's an in-between time frame that most people want to consider for day trading. For people who do day trading, you want to focus on time frame like M15 to H4. From M15 to H4. Now, these are time frame you consider for day trading. And if you are a scalper, you're scalping, you want to consider from M5, that's 5 minutes time frame, to H1. Most times scalpers don't even exceed 15 minutes, 30 minutes time frame. So basically, this is what it then if you are for swing trading, you want to look at H4 to D1 or W1. Then for position traders, for position trading, this can stay from what you're basically looking at D1 to MN. That's the minimal time frame. So take note of this time frame. You are basically time frame is divided into two broadly. The higher time frame and the so these are time frames for different kinds of trading. So you have time frame for different trading type of trading. So depending on which of them, if you are a day trader, you want to consider this time. If you are a scalper, you want to consider this. If you are a swing trader, you want to consider this time. If you're a position trader, you want to consider daily and monthly time frame. Because you'll take one trade, the trade can stay for months, can stay for weeks. You might just take one trade and that's the whole trade for the entire year. So how do you get to here? When you begin to grow your account is big, you don't have to trade often. You could just find one position that are right, you stay on it and begin to take multiple entries. You can have, after a while, you can have up to 15, 20 entries on that particular pair, and it runs all through until the trend ends. When the trend ends, that's when you can exit and find another trend. So all this now beautiful time frame, or beautiful concept. But again, remember our topic today is market structure. But again, you can't take market structure without a good knowledge of it. So let's dive into charts so that we can begin to see how we can use this different time frame. That's why here. So here is my time frame. This is my time frame. You might have to configure your MT5 to look this way. So here's my time frame. First of all, before I start trading, what I do is pick my daily time. This is my daily time frame. Most time I go as much as my weekly time frame. Remember, your support and resistance are stronger on the higher time frame. Now, the higher we go, the more reliable and more stronger they become. So here we are. So I'm trying to pick out. This is part of what I did yesterday and early hours of this morning. I was just looking at major market structure here. Now look at this. You clearly see what we have here is market is likely going to form a pattern. This pattern is known as head and shoulder pattern. Yes, this is the head. This is the left shoulder. Now, if price build up to this point, it will form the right shoulder. So we have a complete head and shoulder pattern. And guess what? What will happen to price? There's going to be a drop to this point, and that's up to how many pips? Let me see. That's going to be up to, from here to here is about 518 pips on Euro USD. That's about what it is, still building. So where will price come? Remember, there's a strong support here. So strong resistance here. Why do I know there's a strong resistance? How do you pick resistance? This is how to pick resistance. Look for 2N. It could be body to wick. It could be body to body. Note it. It could be body to wick. What do I mean by body to wick? Here are my line. Here is my horizontal line, my trend line. Then my crosshair. Here I have my tools. So I need tools to draw this. I'm going to delete this. I'm going to delete all this. Let me delete everything. So I pick my horizontal line. I start looking at a point where price resisted, didn't move forward, where price was resisted up or possibly stopped. Those are my support. So here, all I need is 2 points. I need 2 candles, minimum of 2 candles, and it will form. Now look at it. Look at this candle, the body and the body of this. 2 of this body will give me all 2 of the wick. Now wick is the small part of it. So the more, the better. The more spot you find, the better. So I have 2, 1, 2. So I have 1, 2, 3, 4. This that even broke, it came back. This was a false breakout. So you have 1, 2, 3, 4. So here you have 1. The price came back again to the same spot and it couldn't break. It broke it, but guess what? Price went back again. So here is a very strong support. And I can go back to history to let you know. Look at it. The last time price broke here was in 2022, in November 27 precisely. Now, if you see my crosshair below, you see the information here. See the information here. So the last time price got here was in November 27th. That was when price broke. Since then, price has not been able to break down. There was an attempt here. How many attempts? This is weekly. For how many week? Week 1, week 2, week 3, week 4. For 4 weeks straight, price did not break here. Here was very solid. Now, the next time price came here again, this was when? This was in 2023 in February, 19th of February, and then 26th of February, 5th of March, and 12th of March. Now, again, the next time price came here was on the September. Yes, it was in September recently. The price came here. Look at it. 1, 2, 3, 4, 5, 6. For 6 weeks, price couldn't break here. Now, would this place be a very strong support? Yes, it's a support. Remember, we said support is anywhere price can rest. Price came and rested, so it's a support. Anywhere that resisted price from going up is our resistance. So this is support, this is resistance. This place is resistance, this place is support. Support can become resistance and resistance can become support. Now look at this point. I'm going to draw some more lines again. Here, it used to be a support, but no more. So it's a support, sorry. This point is another support. This point is a support. And this point is a resistance. Now, why is this place a support? When price got here, resisted price dropped down. But when price broke up and got to here, here became a support. This become the new resistance. This is what it is. This is support. This place is resistance. When price broke here, here automatically becomes a support. Look at the next time price came, it became a support here. So here is a resistance. Price broke this resistance, went up, came back again, it became a support. Price broke here, went up to this place, this zone, and came back down again to this same to find a support. It broke this support, it broke this support, it broke this support, but it couldn't break this support. So the strongest support I have here is this and this. Why is this strongest? The strongest in the sense that price has never broken it for a long time. That's the measure of strength. Don't tell me this is a strong support, and when I look, I'll see that price has broken it multiple times. It's no longer strong. So the strongest support is this point. Maybe I should color them, give them a separate color. Let me use a separate color. I use green. And then here I use green too. So those two regions, these two supports and resistance are the strongest. Yes, price has broken here, has broken here, has broken here. It doesn't mean this is in a weekly time frame. So I am looking at it. Price has come here, has broken this. Now I needed price to retest this. We'll still talk about retest. Price will retest this. It broken it, it hasn't retested. So I expect price to come to retest here. So if price retest here, I can expect price to continue to go up to come and form my head and shoulder pattern. Remember, I told you the head and shoulder pattern. So clearly, you see here is my head and shoulder. So I can put a pending order here. So you see, I have a pending order. Why do I have a pending order here? In case price get to here, guys. This is a demo account. Don't take it serious. This is not a live trading account. It's a demo account. So I place a pending order here. Then I'm saying if price hits this region, I expect price to come down. Why? Because I have a head and shoulder pattern. We'll discuss pattern and we'll discuss all the pattern, how to spot out the patterns. But we're looking at support now. Where's my next support? This is my support. So if price come back to this support, I could find a buy because it's broken it. There's going to be a support, a break, a retest, and a continuation. It could be a break, a retest, and a rejection. So it is break, retest, continuation. Break, retest, continuation. Anytime price breaks either support or resistance, you must wait for 3 actions. Action number 1 is it has broken it. That's confirmed. Action number 2, it must come to retest that zone. If it does not retest that zone, price can't move further. Take this from me. It does not retest that zone, price will not go further. Most time, price has proven to do what I'm telling you now. Now, what you see most time is FOMO, the fear of missing out. You see price is going up, you already say, hey, I've missed out. You have not missed out. Because when you realize you have not missed out is that you now jump into that trade. Guess what is bringing you back, and you are not patient. That patience you didn't have before, you now have it very well. So price has broken. This is last week activity. It broke this resistance. I expect price to come back again to retest here. Now, if price does not come to retest here, I will do nothing. So price will come back, retest here. And guess what? We can now find a new entry. And again, let me bust your bubble. Do you know that this place is a resistance? Look at it. Price go here, resistance. So there's a resistance here where price is now. So I expect price to retrace back, is already on a resistance. So you don't buy on the resistance and you don't sell on the support. 2 places you don't do any activity. You don't buy on the resistance and you don't sell on the support. Now price is on resistance. I can't buy here, even though price is looking as if it's buying, but I have a sell order. That's why I have a sell order on this resistance. So I expect price to retrace back to this point. So I must well put my TP here and say, okay, the price hit this point, I want to close up because it's going to retest here. And then we're going to have a continuation or a rejection. When it retests here, this is the second activity. The price will either continue to go up, that's a continuation. Then when price move for a continuation, then I will start expecting my TP. I'll probably find a buy here, and my TP is going to be here. Or if price breaks here and continue to come down, then that's a rejection. And then my next target is where? Down all the way to this point. Is anybody playing with me? Is anyone playing with me? Who is lost here? Okay, we go to lower time frame. Let's drop to lower time frame. This is weekly. So we're going to daily time frame. Okay. So clearly, price broke, retested. On daily time frame, you can see clear break, retest, and the continuation. Remember, on the weekly time frame, we saw the break, we didn't see the retest. So we saw a break, a retest, and a continuation. So this is where Friday ended. This is Monday morning. So we go back again. Remember, we have a resistance here. So I'm going to draw my resistance for this particular zone. I'm going to use the normal color for resistance. Yes. There's a resistance here. Here. Yes, here. There's a resistance here. And that's where price has come to. So I go back to weekly time frame so we can see this. Now look at it. As soon as price went up, it touched my resistance. What happened? Price started dropping. Why is price dropping as soon as it hits my resistance? Because it recognizes that zone as a strong resistance. So price is doing a pullback from that resistance. I can tell you, as at this time we're talking, I want to know how many pip price has done from here to here to here. Price has done well over 16 pips. How long is it going to do for that? I don't know. I'm not sure. But it has respected that zone with 16 pips. So if I put a pending order here, I will be in 16 pip profits. See, market will always respect all these zones. Look at it here. Price came, hit here, it respected it. It will always respect this zone. And these zones are demand and supply zone. These zones are liquidity zone. These zones are where buyers and sellers are waiting for orders to be created. I don't know if this makes sense, but it makes a whole lot of sense to me. So let's go again to a lower time frame. We're still on daily time frame. Let's go to 4 hours. Remember, this is just price action. Looking at now, look at it. On 4 hours, as soon as it hit this zone, price did what? Start retracing, and then you can see our first retracement candle. Now, will this continue? Maybe price can continue to drop down, and that's why you see this my pending order. Of course, it was a pending order I have here that triggered is already in profit and could continue to be in profit. However, it could be a little pullback and price will continue to go up to go and form the head and shoulder pattern as we have seen earlier. Now, I'm seeing one opportunity, head and shoulder pattern, but again, I'm seeing a resistance before me. Which one should I respect? I'm respecting the immediate one I'm seeing, which is the head, sorry, which is the resistance I'm looking at. So on my 4 hours, now if this candle, remember, if this bearish candle forms and it engulfs this, again, we're going back to Friday lesson. If this guy, at the end of it, he engulfs this candle, what does that mean? It means that the seller in the market has completely engulfed the buyers. What do I mean by engulf? Let's bring that language to everyday language. It means that the volume of sell has completely encapsulated the volume of buy. So the sellers are now in the control of the market. And when sellers are in control, price will continue to drop down. And if I find a selling position here, I will make profit as it begins to go down. Does that make sense? If it does make sense, put a 333 on it. If it makes sense, put a 333 on it.
Makes sense, sir. Makes sense.
Thank you so much. So as a trader, what do I do? Do I just jump into this because I saw this? No. This is where patience is a major strategy in trading. What do I wait? I am waiting for this candle to finish for me. Now, but why I will wait on 4 hours is dependent on the kind of trader I am. Remember, we looked at different kinds of traders. If I'm a swing trader, I will do nothing. I might spend the whole day watching this. While the scalpers and the day trader are busy making money. Remember, the gestation period for elephant, for human, for goat, they are not the same thing. But yet, every of them will give back to the kind of child they want. So if I'm a position trader, I'm looking for a long position, I'm going to bank it up to 500 pips. I will not bother about 15 to 16 pips. No, I will not bother. I wait for the market to give me a clear direction. So I'm waiting on 4 hours. But if I'm a day trader, what do? I'll go down to 1 hour to see what I'm looking at. How good is it? How possible is this? So this is 1 hour time frame. Remember, I told you, I said, you can't discuss market structure without time frame. As a matter of fact, market structure is discussed on the author of time frame. Now look at it. Now, can you say that this candle engulf this? In my opinion, no, on 1 hour. No, it didn't engulf it. Now look at it here. Did this engulf this? Yes, it did. If I enter this to look at it, price went up initially, but again, did it stop that? It came down. So if I measure from here, if I enter the trade at the end of this candle to this point, I have about 25 pips. So if I targeted 20 pips, I won. Great. Now, will you say this candle engulfed this? No, it didn't. But these two collectively, this and this have completely engulfed this. So if I waited for this and this finish form and this form, these two have engulfed this. So with this, I have confidence to enter this trade based on engulfing candle. If my entry is engulfing candle. If my entry is an engulfing candle. But if my entry strategy is a hammer, I will enter this trade because a hammer has just formed on the support. So I will enter this trade at the end of this candle. And guess what? You will see me enjoy this ride all the way to this place. We will still discuss entries. Part of what we're going to discuss entry, look at different entry. What entry can you infuse into your trading that will give you reliability? But today we're dealing with market structure. Now again, we move. So I'm going to draw, if I'm a scalper, remember I'm looking for quick path, I will go to my 30 minutes to look at it. Now look at it. On my 30 minutes candle, did this engulf this? Did the seller engulf this buy?
Yes.
So if I'm doing a scalper, I probably would have taken a trade here. In fact, better still, if I go to a lower time frame of 15 minutes, I will have a better reason to take. Look at it. On a 15 minutes time frame, I would have taken this trade here. As soon as this engulf this, I will enter the trade here. Guess what? From here to here is done about 5 pips already. See counting. And sometimes what a scalper is looking for is 5, 10 pips. It takes 5 pips here, it takes 5 pips here, it takes here and there, and guess what? It has made up his 50 pips. It's gone. It's not looking for one place to get 50 pips. It's looking for take here, make up, and then it's gone. So taking a look at this now, you see, as a scalper, I would have left. Again, if I go to 5 minutes time frame, as a scalper, I would have left this. This is where I would have entered this trade. After this form and this form, I would have entered this trade from here. I would have entered the trade here. From here to here has given me how many pips? It has given me 11 pips as a scalper. Can you see the difference? You see how time frame has made difference? But remember, I picked it from the top for a higher time frame to see strong, reliable support and resistance. And from there, you see how we broke it down. We broke it down to 5 pips. If I go to 1 minute, you see, we would have taken the trade long time, and people would have made so much profit up to 16 pips. So if I go to 1 minute time frame, now look at it from here. This is where I would have entered that trade here. And guess what? From here, it's been going down. And this is at this point. So if you ask me from here, there's so much pipping opportunity here if I enter from here. This is where I would have entered. As soon as this engulf this, I'll enter from this candle. Let's look at it. Here will give me around 12 pips. Around 12 price. So you can see pull back, drop. Now, this downtrend is still in vogue. Why is this still in vogue? Because it hasn't been compromised. If this is a trend, hold on. If this is a trend, it's still in vogue. Look at it. If this is a trend, it's still in vogue. Okay. Look at the price drop, it retraced up, it picked down, it retraced up, it picked down. At what point do you say this trend is no longer in bull? At the point where, look at it, this is higher than this. This place is lower than this. If here is lower than this, we say the trend has been invalidated. Or where this low here is higher than this, that means he has started a new one. So we have price will go up above here. He has created a new high above this point. Then I can say that this trend is no longer valid. The market has started another trend, depending on time frame you're looking at. I just want to pause here and take your questions. See if there's any question. I want to take questions. If there's none, we'll build on this and then we can say bye-bye today. Just build on this and then we can say bye-bye. So quickly, talk to me if you have questions. If you don't understand, let me know. If you do understand, let me know. If there's a perspective you want me to explain, I'm just so happy to explain it. I don't understand, speak to me. Don't be shy to say you don't understand. Remember, I'm here. The one asking you. Tell me, I'll explain to you. I do understand, okay? But there's an aspect I wanted you to speak. Let me know that aspect you want us to discuss. And then we can look at that aspect. But this is basic support and resistance. You start your support at a higher time frame. You chart from higher time frame to lower time frame. That's where the content. I'm sure you want to speak.
Yes. It's actually the time frame. The time frame we use. I realized that by the time we move from 4 hours from 1 hour, the chart changed. It changed. The chart pattern changed. So I want to understand why there is a change in chart pattern, and can the same principle be applied to each time frame? The principle, the support and the resistance line, can the principle be applied to each time frame? Because if the chart changes, that means we would be using what applies to that time frame we are using. I don't know if you understand what I'm saying, sir.
I'm trying to understand when you're saying that we move from one time frame to one time frame and then the chart will change.
Yes.
Correct?
Yes, sir.
Okay. And if the principle applies to every chart, is that what you're saying?
Yeah, if the principle applies to every time frame.
Yes. This is what time frame is. Now, let's go back to that chart. That's Euro USD. Okay, you're looking at Euro USD. Now, if I go on, this is daily time frame. If I go on a higher time frame, daily time frame, look at it. What do you think Euro USD is doing? Buying or selling?
Yeah, it's selling here.
No, look at it now. Look at it now. Look at the last one. Is it buying or selling?
Okay, it's buying here.
Good, it's buying.
Where
so on the daily time frame, hold on. On the daily time frame, Euro US is buying. Now, for anyone who is doing swing trading, and I'm on this trade, and I'm going to stay for, I will not bother about this because I'm looking at the higher time frame. That this is what he's doing on a higher time frame. Go to our time. Okay, this is on a higher time frame, on 4-hour time frame. Now you see on a 4-hour time frame, it's beginning to sell. Can you see that?
Yes.
You see the last buy. Now he's selling. He has started selling on a higher 4-hour time frame. But it looks as if the sell just started. Is that correct? So
okay.
So now remember, I want to trade, but I want to get into the market because many a time the challenges trader have is that before you finally make up your mind to take a trade, he has finished selling or he has finished buying. By the time you now enter, you will now turn. You now look as if they were waiting for you to enter so that they can turn. So I go down to another time frame too because I have the luxury of. So what I'm doing, I'm zooming into the market. You understand? The more I go into smaller time frame, I'm zooming to see activities of the market per second.
A second, okay.
So
okay.
The bigger time frame is the overall picture for the day.
Okay.
You get that?
Okay.
Good. So I go to 1 hour time frame. Now, remember, 4 hour is four 1 hour candle. Now, if I go to 1 hour time frame, I'll say, oh, in the last hour, you actually sold. It didn't just start selling now. It sold for the last 1 hour, and they're selling on this current 1 hour. So if I wanted to enter this trade for a sell, I would have entered long time ago. It's even late for me to enter for a sell if I really want to sell now, following what's happening. But again, I can relate with this that there's a little trend here. You can see up, down, up, down, up, down. You can see the little trend. So down, price went up, and so it's possible he just wants to do a retracement and continue to go up. Not because he has done a reversal. He wants to turn and start coming down. It's possible. We don't have this answer at the moment.
Okay.
So I zoom again into a smaller time frame again to see. Remember, we're 1 hour, so I'm going to 30 minutes. And the more I go, I find out that, whoa, this guy has just been selling. They've completely engulfed this guy and they've been selling. And then he has maintained the trend. Look at it, has maintained the trend. Price went up, retrace, up, retrace, up, retrace, up, retrace, up again. And this could be a retracement, this could be a reversal. But time will tell, time frame will tell. So we move to another time frame on 15 minutes time frame. Let's see if 15 minutes time frame will give us that answer. So you can see up, retracement, up, retracement, up, retracement. You can see that up to this point, this guy has retraced. He has come almost to the level where we start. I'm going to draw a line to tell you something. Here. So what it means that if this candle gets to this point, he has violated this uptrend that we're seeing here. Does that make sense?
Okay.
If he comes to here, he has violated this trend we're seeing here. Not completely, he has given me a sign. That if he breaks it and continues to, it means that he has violated it. So I'll wait for a pullback back again to this point. He must come back to test here. If he tests here and price continues to go down, I'll know genuinely the market is heading down. Then I can find an entry and begin to sell it. Now, if I'm a day trader, all this makes sense. But for a swing trader, he wants to quickly jump into the market. So a swing trader will go further step and go down to 5 minutes. Now look at it on the 5 minute time frame. Again, he has not violated this. This is the last low. This is the last higher high. Price has not violated this. It will need to come down here or go below here. So with this now, I can tell you that this trend, it has not violated the trend. A downtrend has not started. An uptrend has not started. So I will just wait. Now, if price finishes here and I see a continuation pattern, remember we discussed continuation pattern. What is the continuation pattern? Look at it. After price drop down, did you see a continuation pattern?
Yes.
This guy gave you an indication that price wants to continue up. And if you enter here, guess what? Did it go up? Yes, it did.
Yes.
So if we see a continuation pattern here, guess what? This might just be the continuation pattern. We'll enter for a buy and we'll start riding it up. Why? We have seen this on the 5 minutes. So people who are waiting on 1 hour, we would have entered the market and maybe conclude our trade and exit before the people waiting for 1 hour will even see it. And the higher you go, what's the right word now? Not slow. I don't want to use this. I don't want to use this slow. The later they will see their confirmation. So because I'm on the lower time frame, I get my confirmation quicker.
Quicker. Okay.
Again, I could still get an exit sign faster. I'll just see an exit file, I'll leave. But they will not see the exit now because I am on the lower time frame. I see it faster and I will exit. And they will still be in the market and continue to go up after the short move. Remember, let me show you something. Let's go back to the daily time frame. I'll show you something. Let's daily time frame. Let's look at this. Now look at it. If you enter this trade here, this is daily time frame. The person who enter here might still be on this trade up to here, but the person who enter on 1 hour cannot survive this. On 1 hour, if you see this on 1 hour, you look as if the market has strength. So he would have left the market. But guess what? The person on daily time frame knew that it was a retracement from this move, and it has continued to go up. When he got here, he knew it was a retracement. He has continued to stay. And guess what? He probably will be in this market even up to this point now, and may not exit. Might just be expecting the market to do a pullback or a retracement and continue to go up until it will hit this region or above here. That's what higher time frame does. It gives you the mind to still stay in the market. But the lower time frame gives you a quick signal to exit or to enter. That's the best one. It gives you a quick signal to enter and quick signal to exit. I don't know if that makes sense.
Yeah, you are. It makes sense, sir. It makes sense. Thank you, sir.
You're welcome. Someone said, I'm going to take the question. He said, sir, as a position trader, after my top-down analysis, can't I take my trade from 1 hour time frame? Sure, you can. You can, but again, how reliable are 1 hour signals? Now, if you see, how reliable are they? If you see an engulfing candle on 1 hour, you know 4 hours is more reliable than the 1 hour. So the person who is taking 1 hour, as soon as price go up, you can exit with profit. So you can take, and as a position trader, you put your stop line. Guess what? After a while, price will start coming down. You think it's just doing a pullback, and it will reverse and go and hit your stop loss. So you can enter on 1 hour time frame, but be rest assured that if anything changes, you should be patient to stay on the higher time frame because of what you're seeing on higher time frame than what you're seeing on lower time frame. Okay, another question said, my question is it safe to draw support resistance zone manually or to use indicator to read them for you automatically? The best way to draw support and resistance is to use your hand. Indicators can do all this job for you. But again, you don't doubt what you draw. You see the way I draw now? Every trader must know how to draw it by himself. You start by learning how to draw it. Pick two ends, from one end to one end, pick them together, and then see if other lines fall in. If they fall in, fine. You know, it's just like saying, can I take my trade myself, or should I get an indicator that will take the trade? Of course, anything can take the trade for you. But again, I like to take my trades myself. I like to set pending order. Okay, that's where we are. Any other question? If there's no other question, this might just be where we'll draw the curtain. I'm going to give assignments, not assignments, work. Everyone, you're here. Pick these 5 pairs. I'm going to give the list of 5 pairs. Draw major support and resistance. Major support and resistance. Now, what are major support and resistance? Here, you want to draw support and resistance in relation to current price. Now, here is GBP USD. If I come and draw my support and tell you this is my support, I'm just fooling, because there are several supports price will pass before they will get here. Why did I go to start from here? Even though, yes, this is a pronounced one, it's a very strong one, but there are more. Look at, there's one here. Look at it. There's one here. Price has not crossed, it hasn't crossed this. So I'll start from here. Can you see that? There's one here. These two are the same thing. There's one here. So I can come and there's another one here. Remember, this is daily time frame. Price will first of all hit here before it goes down. Before I can even draw here and draw here. But I've already picked this. And if I'm looking for another one, I can begin to look for, yes, something around here. How did I know this? Look at this. The week here, the week here, the week here. So I have 1, 2, 3, 4, 5. I have 5 weeks. 1, 2, the body. This body joined. So I have 1 body, 2 body, 3 body, but I have 1, 2, 3, 4, 5, 6, 7, 8. So price is likely going to respect here if it gets here. So this is one. This is the immediate one. This is where I'm expecting price to hit first. So my analysis can even start here. So 5 pairs. These pairs are conservative pairs.